theme music. Here we are, live, ready to get at them.
All right, let's do this. Hello, everyone in Facebook land and in all the different Facebook groups we're a part of and LinkedIn. So, welcome. This is Purse Strings coming to you live. As you know, Purse Strings provides free online tools and resources so that women have a one stop destination they can go to for all things financial. Any questions you have, any concerns? We have attorneys, lenders, we have realtors, coaches, and we have financial advisors. And we are bringing you live in living color financial professionals every week to offer their wisdom and expertise. And today we have Maggie Koosa. Thank you, Maggie, for being here. Yeah,
Thank
it's
you for having
terrific.
me.
Terrific. Yeah. We're so glad to be able to bring to our communities of women and to our LinkedIn professionals um, just short presentations on all different topics around financials. So that's the whole mission of Purse Strings is to provide free online tools and resources, ongoing education, information, tools, resources to our communities. And in turn, we also have this amazing Rolodex. I call it a Rolodex, which is an old word of top tier financial professionals who've been Purse Strings approved, so vetted by us. And we're happy to bring Maggie to you today. So, Maggie, do you want Maggie Nielsen, do you want to give a little intro to Maggie Koosa?
Yeah, let's wait one more minute just so a couple of people jump on. I see people jumping on right now. We got Shelly on, which is always great.
Wonderful.
We
Hi,
love Shelly
Shelly.
here.
Great. Yeah, Shelly's amazing. She's one of our an admin in one of our Facebook groups. And she's making some different changes in her life too in terms of career. So I'm glad that she's on today. And
Nice.
yeah, really great. She's a great supporter of Purse Strings. So Maggie Koosa, where are you coming from today?
Stamford, Vermont.
Wow.
Yep, all the way up here in Vermont.
That's a place I've never been to. So how's the weather up there today? I mean, is it rainy or is it beautiful fall colors?
It is rainy. We do have beautiful fall colors, but right now the fog is covering our green mountains. So I look out the window and I see all sorts of beautiful colors. I wish I could have that as my backdrop, but I would probably get wet going outside right now because it's pouring.
Yeah. Well, it's
pretty
rainy.
funny.
It's been a lot of rain here in the Chicagoland area too. A storm that's gone through starting yesterday all through the night, and I think it's maybe stopped raining at least for a short window, but that's fall in Chicago. It's beautiful, but it gets cool and windy and there's rain coming through. And Maggie's not too far from me.
Yeah, it's nice out now. I'll have to check it out.
Yeah.
Get out there, stretch my legs.
Yeah, really. That's
All right,
right.
well, got some people jumping on. Let's get at it today.
Yeah.
Today we have Maggie, and she is the owner and founder at The Alchemist, where she approaches addressing financial needs as a concierge and would like to address your like a concierge would address your personal needs. Her mission is to take out the time-consuming planning out of financial planning. Her clients enjoy access not only to her investment ideas and diversification strategies, but also to all the stellar networks of outstanding professionals you need at those different stages of life. She knows time is limited, which is why financially plan for quality life. She works together to help coordinate and implement the strategies that will allow you to attain your goals and dream sooner with fewer bumps in the road, which sounds ideal. And at The Alchemist, you will receive the personalized service you need, as well as robust strategies for your investments and risk management appropriate for you and your financial objectives.
Wonderful.
So Maggie, we are so excited to have you here today. Thank you for presenting to this group. And with that, I'll give you the floor. Anybody else, please pop in questions along the way, and we'd love to tend to them. So here you go.
All right, sounds good. Thank you for the intro. All right, let's get started here. So we are talking today about cash flow and its implications on your retirement. So we have, let's see here. Let me make sure that my tech is working here. All right. What do I mean by cash flow? So a lot of people are unsure about the word of cash flow. It pertains only to business. However, my definition may be different than other people's. My definition is money flowing in and out of our lives, our households, that will either positively or negatively impact our quality of life. And a lot of people, if you've heard the phrase, cash may be king. However, cash flow is the army supporting that king. So without good cash flow, you will not be able to accumulate savings. So a lot of people say, well, in order to accumulate savings, I need one of those scary things called a budget. And it's not the end all be all, but it is a starting point. So for me, if we have goals and we're unsure why we're not making the progress we want, if we want to save but don't seem to have much left over, if we want to increase what we're saving but not sure if and how much we should, then it starts with your monthly bills, and take a look at expenses, savings, and at the end of the month, this number right here, monthly income after taxes, that's the money we have to so-called play with. So we can't possibly know how much of an excess or deficit each month has without actually figuring out where is our money going. So, which of the following is a monthly bill? So we have subscriptions, entertainment, food and dining. So a lot of people would say, well, they're all monthly bills. I would disagree. I would say it depends. Subscriptions are reoccurring monthly expenses. So things that a lot of people set things up so they automatically go out of sight, out of mind. And so they just accumulate a list of different expenses that they pay every single month. And entertainment, food, and dining out aren't reoccurring, but even though they're not reoccurring, they should be part of our cash flow. We should be budgeting for them, because how many of us work hard and want to eat out? We want to order out once or twice a week, and that's okay. We are planning for quality of life after all. Are such things necessary for you to lead a happy life? If so, we got to add them in. Which of the following is a flexible expense? I wish I could actually be flexible like that, but I only work with calculators, so not going to happen. So flexible expenses: rent or your mortgage, airline ticket, or cable and internet. It depends. Obviously, rent and mortgage is a static expense. I'm fairly certain the mortgage company and landlord are not going to be okay if you just don't pay it, or if you pay a different amount. Airline tickets and cable/internet can be flexible expenses. This is true. Hold on. My apologies. This is true, but it depends. So a lot of people travel for work. And if you travel for work, you may be reimbursed for it. If you own a business, this is one part that I love owning a business, and you have to travel, then those travel expenses may be tax write-offs. If you own a business and must work online, or if you're an independent contractor, then your internet may be a tax write-off. As I tell all my people, please always work with a tax professional, like a CPA that you know, like, and trust, to guide you through taxation. Which of the following is not a form of savings? Investments, emergency fund or a safety net, or credit cards? Shocking. It depends. Obviously, the word savings says that we're putting money away. I always tell my people, we're not saving, we're just postponing spending. So whether that spending is going to be towards an emergency, towards a vacation, towards retirement, it's stuff that we're going to be planned on or unexpected, but we're saving in order to address those. So both investments and emergency funds qualify as standard savings. Cool. Credit cards are seen as accumulating debt, not savings. There is a but here. If you utilize your credit cards to earn cash back or accumulate airline miles, and then use them to, quote, save in different areas, as long as you're paying them off in a timely manner, it can add great flexibility to your cash flow. So when we have to pay large bills, I always, all right, well, If we're traveling in the next year, all right, let's get some miles in there. So if I'm going to have to pay the bill anyway, I'll put it on my card. And then as long as I have the money to pay it off, I pay it off either within the month or within a couple months, as long as I have that interest free. And I work accordingly to that. If you have questions towards this, please, by all means, put them in the chat. I love questions. They are a sign of intelligence. Okay. I don't know if there are any math geeks out there, but I thought this picture was funny. A budget does not have to limit you. Any mathematicians out there? I appreciate the jokes. If not, I am sorry for the poor humor. As I said before, we're planning for quality of life. So within your budget, please make sure that you include such things as dining out, Netflix, vacation, subscription to the Financial Analyst Journal. Okay. But aren't we supposed to be saving every dime we can for retirement? No, you don't have to. So a few things, obviously it's a misconception. We are killing a few proverbial birds with this stone we call budget. So a few stones includes, as we pay our mortgage, we're developing equity if we own a home. As we are accumulating savings, we're earning money with our money, even though the interest rates are not that good. Adding to our retirement savings or our overall investments, enjoying life, paying down debt systematically. In general, with a budget, we're providing ourselves with peace of mind. We're not worrying about what may come up as we are better organized. And as we're better organized, we are better prepared. A comfortable retirement is a goal, but we have to plan for our current and our future lives. We have to. Because if we don't plan for quality of life during our whole life, and not just when we stop going to work every day, we're going to end up missing things. I'm sure, unfortunately, many of us have lost people sooner than we would have liked. And I had an uncle that I lost, and his whole life, he busted his butt and he worked and worked. And I'm going to, when I retire, I'm going to own a boat. I'm going to take people out on tours. And that was awesome. And he passed away before retirement. And so he had scrimped and saved and just waited and waited and waited and ended up not being able to do what he wanted. And it was heartbreaking. And I never want any of my people, I don't have clients, I have people. I don't want any of my people to ever live like that. So I don't want you to skip a vacation this year because, well, I need to save for retirement or I need to save for this. You don't put things off. We do things in moderation, but you got to enjoy your life while you have it. You work hard, you need to play hard. So even though retirement seems light years away for most, even when people are approaching retirement, oftentimes they struggle to describe what they're going to do. I mean, you think about that. You go to work 8 to 10 hours a day. What would you do if you didn't have to go there anymore? And I work with a number of people and they don't know the answer to that. And that's okay. The good thing is life doesn't completely change or stop when we transition. When we transition jobs, when we transition from being just a single woman to a mom, these things, they're transitions. Life doesn't completely stop. Things just change. But we have to work to do, we have work to do prior to planning each step of our lives until we get into it. We have planning to do and we have preparations to do. Next steps. So this is where we're going to spend the bulk of our time right now or today. Organize your expenses. A lot of people, so let me pull this up. A lot of people don't understand how to organize their stuff. So we're going to take a look at this. This is available to you. We can send it to you so you guys can download it. But this is your pathway to a quality of life. So here we have a spreadsheet. I know Excel spreadsheets can be scary sometimes, but this one is awesome because you just plug in numbers. So your salary, is $3,000 a month. And then you plug in all your different bills, $1,200 a month, and it carries it right across. Utilities, it's like $120 a month. And this can help you figure out what you have going on. So we fill in our bills, and as you see, there's spots for all sorts of things: Netflix, Vudu, all sorts of things, dining out, coffee, gym memberships, emergency savings, credit card payments, that sort of thing. So as we get to the bottom here, if you take a look, you can see that we have an excess of about $1,600 a month, at least with the bills that we have going on right now. Right? This allows us to organize our expenses. So what you want to do is you want to go through, you want to go through your bank statements. You want to go through your credit card statements. You want to go through all the things, all the cards you use in order to pay your stuff. And you find expenses, subscriptions, fill that spreadsheet in as best you can. And you may have forgotten about some of the things that are actually being drawn on your account, in which case, this next step, clean up your subscriptions. So if you're like me, you've signed up for things like Fitbit Premium. Oh, it's a free trial. And then I forget about it. And all of a sudden it starts popping up on my monthly bills. And I didn't even realize it. And I was like, oh, I totally forgot to cancel that. It happens to the best of us, even if we're diligent. So we take a look, we clean up subscriptions. If we do this and we take a look at our stuff on a monthly basis, you'll catch things like that. I know a number of my people who have signed up for gym memberships and thought they canceled it, and it has continued to be drawn out of their account because they don't pay attention. Subscriptions, do you need all of them? Are there any redundancies? You gotta take a look. The same with evaluate your entertainment options. It used to be we would all just have cable, but now, do you really watch Netflix, Vudu, Amazon, YouTube TV, Hulu, Apple TV, etc.? Are there any redundancies? Do you actually watch all of them? Because if you don't watch all of them, consider canceling some of them. It'll cut down $10 here, $15 there, $20 there, but it'll cut down on your monthly bills and you won't have to worry about all this money coming out of your account. You'll have more at the end of the month in order to play with. Next, we have review your shopping habits. How many of you shop on Amazon? Anyone? Anyone want to raise hands on this? No, I'm the only Amazon shopper here. Well, I find a lot of people, when they're bored, they're sitting in a doctor's office. I'm sitting outside my child's school. It's taking a little bit. I'm just going to scroll through Amazon or eBay, Etsy. Do you have reoccurring purchases that are unnecessary that you forgot about? My wife kept forgetting to cancel her K-cup deliveries, and we started accumulating boxes of coffee cups. Just saying, these things happen to everyone. Next, do you have any credit card debt? If you do, you got to prioritize. So on this spreadsheet, underneath here, you could have different credit cards. So you could have Capital One, you could have Discover, you could have American Express. You could have all sorts of things. And again, list the various expenses. And what's great about this is that you have an entire year on one page. And it shows exactly what you have going on. So maybe you get a bonus in March. Maybe, you have a larger bill in April. And if you put that in, you can come down and say, all right, well, how much excess do I have? Oh, I'm going to have a deficit this month. Maybe I should shift what I'm doing. So we have credit card debt. We prioritize. You want to, 1, figure out what exactly you're paying. 2, you want to figure out what the percentage rates are. Because if you don't know those two things, you can't really prioritize and come up with a strategy to pay down your debt. So do you pay the minimum payment or more? Do you take advantage of interest-free payments? Or are you like some people who carry a steady balance on your credit cards and it just seems just never ending and you're never going to pay them off? We can strategize, get it to the point where you have nothing on your credit cards and you do what I previously talked about, which would be, hey, you know what? I need to spend, $3,000 on something for the house. Okay, well, hey, I can get cash back on that. So I'd only be paying 95% of that instead of 100%. Hey, I'm going to use this card instead of a different card. It allows you to strategize. If you don't have room on any of your credit cards, that's a problem. Because when it comes to an emergency, if you're out and about, oftentimes that's what people use as their emergency funds. And that's okay, as long as you have an emergency fund to pay off the credit cards with. Okay. Review your home and auto insurance. Now, most of my people have never reviewed this. They got a quote. They said, yep, that sounds good. I can afford that bill. And that was the end of it. However, when you transition from, let's say, renting an apartment to being a homeowner, your needs change because now you have an asset. And I don't know if you guys know this, if you ladies know this, but that's your biggest risk of getting sued is your car. You think about it. When else could you possibly injure somebody else besides in your car? I mean, I don't know of any. That's the biggest risk. And so we need to make sure, in order to protect our home, we have our auto insurance on point with what you should be having. And a lot of people, want to discuss this with me. We can get into specifics. You guys can reach out to me. We can talk about it, but you need to work with somebody that you know, like, and trust, because you don't just want the cheapest insurance. You want to talk to a human, and you want to make sure that you're getting the proper coverage that is also cost effective. It makes a difference, because when you're not properly insured, unfortunately, if you're not properly insured, oftentimes the time you find out about that, it is too late to actually do anything about it. And it could mess with your financial future. And I'm about quality of life. And that, my friends, is not quality of life. If you have a mortgage, should you refi? Should you refinance? Some people, if you did not put down enough on your mortgage, you are paying PMI, which is mortgage protection insurance, which is an extra $100 to $200 something on your mortgage. If you were to refi, oftentimes you can end that PMI. And you might want to consider refinancing, because a lot of people would like to lower their monthly bill. And depending on your particular situation, you could take money out of the equity in your home, or you could just lower the payment and stretch it out for the same amount of years that you're comfortable with. There's a number of things that you could do, but you could lower your rate and potentially be saving money every single month. So something to consider. And again, if you don't have a banker or a mortgage person, you want to get recommendations for it, because it's hard to know who to trust. And it's important that you get somebody who's not just going to try to sell you something. Retirement savings. Are you doing enough? A lot of people, I just met with a gentleman the other day. I actually met with a 60-year-old gentleman who wanted to up what he was doing for retirement, and a 30-year-old gentleman who wanted to up their retirement. And their wives were in on the discussion, and the wives were asking more questions than the gentleman. And everyone was like, well, how do we know when we should be saving for retirement? How do we know how much we should be saving for retirement? Should we save a dollar amount per check? Should we save a percentage? And I always ask, well, are you getting a match at work? And if you're getting a match, then you want to put aside as much, at least as much as you need to in order to get the full match, because you do not want to leave money on the table. And we want to be strategizing in regards to our cash flow. So if you're able to, I have a number of young people who, hey, I just graduated as a nurse. I'm starting my job. I've never had a big paycheck like this. I've been a poor student forever. And so well, what do I do with all this extra money? Well, if you start putting it aside now, it'll hurt less because you're not used to getting a paycheck. But once you get used to having a paycheck, then you're like, yeah, I want to increase, but how do I do that without hurting my cash flow? So you can do a number of things. One, you just kind of bite the bullet and start at like 3% and increase it every year. You can actually have it auto increase. So I trick some of my people into increasing what they're saving for retirement without them actually having to go in. You can actually have it auto increase 1% per year. And let me tell you, ladies, you will not feel it. 1% a year, oftentimes people will get 1 to 3% raises every year. You increasing your retirement saving by 1 or 2%, you won't even notice it. And soon you'll be saving 10, 15%, and it will be snowballing. Your account's going to be growing much faster than you thought it would. And you're going to be pleasantly surprised by what you have going on in your retirement. I'm all for saving for retirement, but again, you gotta balance that out. You don't want to cripple your cash flow at home in order to save for your retirement. However, you don't want to spend all your money right now because, as I said, we're not really saving, we're just postponing spending. And so some of this money, we need to postpone spending until we're retired because our future selves are going to thank us for it. So I'm up for questions. Anyone in need of clarification, fire away.
Thank you so much, Maggie, for all that great information. Can you hear me?
Yes, I can.
All right, cool. Sometimes I have sound issues on here, so sweet.
No worries.
And we had some people following along really saying, they left their 9 to 5, so they're trying to figure out how to budget this way. So if anyone does want this sheet that Maggie has made, we're more than welcome to email it out, message us on Facebook, LinkedIn, message Maggie, message me, anybody, and we can get that over to you. I just started already laughing in the beginning when you were talking about how it's a write-off. Have you seen the big thing of how like the whole theme about how it's a write-off, everything's a write-off? And so
supposedly
I think
now they're changing the rules.
I like how you have to underline there that yes, you need to talk to a tax professionalist, or can't just write anything off as much as we all like to claim from Schitt's Creek or something like that. That's a write-off. Yep. It's not all a write-off, but great point there. And so when you're filling out that budget sheet, one of the questions I have for you is, do you start with today or do you go back a couple months or do last year's and forward? How do you kind of approach that when getting started?
Well, people oftentimes will get overwhelmed, and I don't want people to get overwhelmed. Yes. The whole thing is to you need to get started, like pull the trigger. So my suggestion would be start with October or start with September. Last year, things cost less. Mm-hmm. Now, outside of the plague, sort of, things are costing more. So I would start from, if you're really stressed out about it, just start from October on. Mm-hmm. A lot of people are like, well, I'll just carry a pad around with me and I'll just write down everything I do. I'm like, wow, don't do that. You don't need to stress out like that. Like, guys, ballpark. Like if you say that you spend $200 on groceries and then you spend $220 on groceries, it's really not going to blow up the whole thing. However, if you don't say, hey, I don't spend money on coffee, and then you buy $5 worth of coffee every single day, that's gonna impact. If you buy lunch every single day, you don't put it in there, that sort of thing. So you want to start out simple. So I know it says January through December, but honestly, just start from where we're at. Start from October and have it lead into the following year.
Right. That sounds great. Because I know sometimes it is hard to look back and you're like, oh, I didn't need that then, even though then you thought you did need that item. But it's also, I forget what happens, what bills come every 6 months. So those are ones, maybe to gloss over. But yeah, we don't need to go into detail every day in the past right now. Just keep moving forward with that budget.
Well, I pay my auto insurance every 6 months, and I have my auto insurance coming up in November and then again in like April. And if I would totally forget. And then all of a sudden this big bill would come out of my account. I'm like, whoa, what happened?
Whoa.
Well, I need to check out my cash flow. Like, I need to make sure that I'm on point with that. But that way, if I know that, then, hey, I normally put aside maybe $1,000 a month in savings or whatever it may be. I may skip it that month. If I have a very large bill coming out and I'm like, well, I don't want to stress my cash flow out that much. So I'll just skip that one. And if you put it in there and you plan ahead, it's not really stressful because you saw it coming and you planned ahead and adjusted accordingly.
Right. That's great. That's what you have to do for sure. And then I also liked how you're talking about all those entertainment options, the thousands of TVs you could pay for. I was talking to somebody else and they're like, if you can be hitting shows and Hulu and Netflix and, Apple every month, that's way too many. Like, pay for one a month, watch your show, move to the next one. You don't need to watch every $30 every month when you could do 10 in each month, and recalibrate back around on your shows, do a little cycle, which I always thought was a super fun idea because even though you think you're watching them on all of them, you're not.
You're not. You're not. We work for a living, Maggie. We work. I don't have.
I know. Apparently, I need to work with a TV company. And then the last point I really wanted to touch on, we'll see if some questions come through, are the homeowners and auto insurance, because that's a huge place where so many things, like I'll even see on my phone, like save a bunch of money here, but then they really do skip down your benefits, which is why it's so cheap. Which is something we need to be aware of. Like you said, driving a car, it's dangerous. At the end of the day, it's dangerous. You have your kids, you have somebody else's kids, loved ones, family members, you're Ubering, and who knows what you have in there. So we can't skip and save all our money on the car insurance. It's definitely something to reassess, but it's also something that we want to make sure that we are fully covered, understand our coverage, and working with somebody that we do trust, that we know that if shit hits the fan, we're okay.
Seriously. Because that is not the time when you get in a car accident. That is not the time to go, oh crap, what kind of insurance do I have? And
I save $10 every month because now that's not covered.
I'm like, the general will save me. I'm like, oh God, no, run away. So another thing that a lot of people don't understand is uninsured motorists. So ladies, when you see the limits, so it might be a limit of 25,000 to 50,000. Or 100,000 to 300,000. A lot of people have no idea what those limits are. So let me break it down for you. When you see those two limits, that is per person and then total per accident. So if it's 2550, that means they will pay up to 25,000 for up to 50 grand for the whole accident. So if two people sue you for 100 grand, they'll each get 25 grand and that's it. And you're on the hook for the rest of it. That's a problem. Now, if you're renting an apartment and you have no money, they can't really get blood from a stone. However, when we do silly things like buy houses and save for retirement, we now have things to lose. And when you have things to lose, you have to transfer the risk. And that's exactly what insurance is. Its definition is transferring the risk from us, pay a little bit, transfer it over to the insurance company. So if somebody sues me, I don't have to worry about it. My insurance company will handle it. Uninsured motorist is also listed under there, right? And a lot of people are like, well, I don't want to cover somebody else. If they don't have insurance, that's on them, blah, blah, blah. Yeah, you say that. That's not what that money is for. Uninsured motorist is insuring you in case someone who is silly and does not have insurance strikes you with their vehicle. If somebody has no insurance and strikes you with their vehicle, what are you going to do? If they don't have insurance, they probably don't own any assets. They probably don't own a home. You can't get blood from a stone. So if they damaged you and or your vehicle, God forbid your children, you would be shit out of luck. You wouldn't get any money. And maybe you can't work. Maybe, somebody needs physical therapy or whatever. If you have that uninsured motorist, you could actually turn around and sue yourself because they were uninsured. You could sue yourself. And if you have $25.50 for coverage, not going to get a whole lot. But as soon as you become a homeowner, you should move up to $250, $500 because the average lawsuit's about $200. And with $250, $500, it covers you and it can help protect your home so no one can put a lien on it. And when in doubt, if you live in an area that you're like, people are suing left and right, get an umbrella policy.
Mm-hmm.
A lot of people are like, what's an umbrella policy? Isn't that expensive? It's not. It's only a couple $100 a year. And it will actually literally put an umbrella over all of your stuff. So if you we drive, I don't know where some of you ladies are, but in Vermont, we have icy roads. And so if I'm driving slow, but I slip on some ice and I boop into the person in front of me, oh, my neck, oh, my back. And they sue me for $500,000. Well, I have 250, 500. So my insurance company would go, all right, cool. Our person screwed up. We're going to give you 250. Romy, I love you, but you need to go. My 6-year-old is at the window trying to get my attention. My apologies. Go.
Oh, no.
I love you. Go. Try to focus. I have ADHD and have a 6-year-old like in your face. Like, hey, Mom.
Welcome to working at home.
Seriously, I'm like, so we have 250, 500. So the insurance company will be like, our person screwed up. Here's 250 grand. I'm on the hook for the other 250. But with my umbrella policy, the umbrella is like, oh, the insurance only paid out 250. Here's the other 250. And they protect all of the rest of my assets. And so I don't have to worry about it. It's called peace of mind. Definitely. And when we have teenage drivers, get an umbrella policy. They may drive like a grandmother. I don't care. They're more likely. That's why you're paying so much on your insurance, because statistically speaking, young drivers get distracted. Old drivers get distracted. If that stresses you out, get an umbrella policy and it will save you. And again, if your insurance person is not asking you questions, get a different insurance person, because they should be asking you questions, because it needs to be cost effective. But ladies, it has to be proper coverage. It's sort of like your medical insurance. It's all well and good if you only pay $10 a month for it, but then you go to use it and you have to pay for everything. What's the point? If you're going to have the insurance, get the proper coverage.
Exactly. Yeah. If you're going to put some money down, just do it right.
Do it right.
Which is great. Yeah. I mean, those are all great examples and you don't always know about that, but yeah, we need to be having these conversations. We have some different people who can help you with that insurance. I know Maggie has people who can help you with that insurance. It's just having the conversations, asking the questions, telling people about your life, and they'll know what the right thing is for you. Yes. This has been a wealth of knowledge. Let me bring in Barb and check on see if we got any questions popping around anymore.
Maggie, thank you. And thank you for that little tutorial on insurance, because that is really important. We do need to probably go deep dive on that in one of these as well, because you're right. I mean, insurance is very critical, and assessing that annually and not going on the cheap with it, but really making sure that you are covered. I do want to mention, Maggie, a couple of things that you said that I just thought were so spot on. You need to live for today, right? So many people, like you're saying, scrimping and saving for the future and doing without. Only to find that, there were things that they bypassed would have made them and their lives happier and better. So let's, really consider that, I think the budget, the B word, is so scary because people think they have to live on less. While, yes, you have to be cognizant of where your money is going, you also have to live for today. So I think that was really an excellent piece of advice. Thank you for that. And I think what it does is it gives people permission to say, gosh, I really love to go on vacation every year. I don't know if I can afford it, but you need to live, right? Everyone's got to live their lives.
Well, if you budget it, you can afford anything.
Exactly.
I put in, I get a haircut every month. I get a manicure every time I get a haircut. Do I need it? No. But who doesn't like a manicure? It's relaxing.
It's good for the soul.
Of course you need it.
You need a manicure. Like, come on. Or like massage. Ladies, you seriously put it in the budget. If it's in the budget, I have money for that. And I still have money at the end of the month. Yay. Everybody wins.
It's funny because I was standing in the chip aisle with my husband and he goes, well, what do we need here? And I'm like, it's not about need. It's about want. What do we want?
You don't need chips. But.
Yeah, but you want it. So, and you want massages and you want, vacations and you want manicures. You want to treat yourself because you earned it and you deserve it. So that's all part of it too. Budget is not a dirty word. Exactly. Exactly.
Yes.
Terrific.
Yep.
Yeah. This has been so fun, and you've given us such great information to think about and to work through. And definitely, yeah, we're going to share your little calculator spreadsheet. What a great way to kick off the new year with a full spreadsheet where you can start documenting your long-term or your budget for the new year. So, yeah,
Yep.
let's get that out there, Maggie.
Definitely.
Yeah.
So yeah, thank you again, Maggie, for coming on today and giving us this wealth of knowledge.
Yeah, it's been fun.
Maggie is one of our Purse Strings approved professionals, so you can always check her out on our website, pursestrings.co. She's also the owner of the founder of The Alchemist, your wealth concierge. So you can always reach her there at mkoosa@youralchemist.com. If anyone does want that PDF, the spreadsheet, email Maggie, email this Maggie, email Dr. Barb,
Yeah.
message Purse Strings. We'll get that over to you. And we appreciate for everyone jumping on today. So thank you so much. We'll get the one-page handout out tomorrow so everyone can just have a quick overview highlight. And we appreciate you coming on today.
Yeah. Thank you,
I
Maggie.
appreciate you having me. Thank you so much.
Okay.
Yep, now you can go play with the kids. We'll talk to you later.
Bye.
Bye.